Now, if you want to invest in the Chinese stock market, I think this is the easiest way. Hi everyone, this is Pete here. So with the rise of the Chinese market, there are a lot of questions about how do you participate in the Chinese stock market. Now, I would say to invest in individual stocks might be a bit tougher because you need to read the financial report, understanding the business profile. But one of the easiest way is to actually look at the Chinese ETF. So in today's video, I want to go through which are the ETF that you can consider and how can you compare them. Number one, you must know that there are actually two main ways to buy Chinese ETF. Number one is definitely buying from the US. So these are actually US listed ETF that helps you to invest in Chinese stocks. Or you can actually buy those that are listed in the Hong Kong Stock Exchange over here, right? So I'm going to go through these two in this video. Number one, let me just bring you through some of the more famous and more common US ETF, okay? So number one over here, this is actually KWEB, right? So this is the CSI China ETF, and you can see they have the very familiar names. For example, Alibaba, Tencent, right? These two are the biggest holdings, followed by Meituan, JD, PDD. So this is a very internet tech focused ETF, all right? Now, the next one is actually the GXC, the SPDR China ETF. So this one actually, if you look at it, right, it is a bit similar to the KWEB. However, they have some other interesting holding addition to it. For example, the China Construction Bank, Industrial Commercial Bank, Bank of China, Ping An Insurance, BYD, so on and so forth. So this is of a more complete picture where it not just include the tech companies, but also include the financials, right? And even some of the consumer discretionary. For example, over here, for those of you who drink, this is Guizhou Maotai. Now, the next one is ASHR. Now, ASHR, it is slightly different. This tracks the China CSI 300. Now, not the CSI movie, but these are the top 300 shares in the Chinese market. So over here, you can see number one is actually Guizhou Maotai. For those of you who don't know, actually Guizhou Maotai is a very big company in China selling alcohol beverages, right? And followed by it, there's CATL, there's one of the main battery makers, Ping An Insurance. So you can see over here, there are a lot of banks, right? Consumer discretionary like media, and even some electrical appliances like Gree as well, right? We do see these appliances coming up. So this is more of a China-focused ETF rather than just investing in Tencent or Alibaba, right? So if you put everything together, I basically took out the top 7 ETF based on asset size, right? Based on asset size over here. So you can see these are the various ones: KWEB, MCHI, FXI, ASHR, YINN, CQQ, and GXC. Right, so you can see these are the size of the portfolio. Now, the important thing about this few is that there's a main difference in terms of the number of holdings they have, right? So for example, KWEB and FXI are actually very concentrated holdings. They are only about 33 and 53 holdings respectively. And they are very concentrated at the top. For example, for KWEB, the top 10 already accounts for 63% of the portfolio, whereas FXI is close to 60%. Okay, now if you're looking for something more broad-based, then it will definitely be MCHI and ASHR and GXC, right? So for this three, you can see there are much bigger holdings, right, in the hundreds and even thousands. And the top 10 doesn't occupy that many percentage. Maybe MCHI still does, right, close to 47%, but ASHI is only 23% and GXC is only about 37%, right? Now over here, there's an odd, interesting ETF that's called YINN. This is the China Bull 3X ETF. So what does it do is that if the Chinese stock market goes up by 1%, this ETF will actually go up by 3%. Over here, you can see that the holding is only 3 because they don't actually hold physical shares, right? What they do is they use futures contract to simulate the return over here. But there's another element that you need to watch out for when you're choosing ETF. It's not just how liquid it is, how many holdings it does, but also what we call the expense ratios, right? So this is actually the cost of the ETF charging to the investor. So over here, I've overlaid the expense ratio over here, and you can see that, of course, the synthetic ETF, for example, YINN, is a very high expense ratio at 1.47%, whereas the rest are closer to 0.5%. But how about the returns, right? So before I go into returns, I want you to make a guess, take a pause at this moment. Which of these ETF actually did the best this year for Chinese stock market? Alright, so these are the returns over here. You can see that if we are looking at a year-to-date performance, definitely YINN is the best, but this is because it is a 3x ETF. That also means if the Chinese stock market draw down, there's going to be a much bigger drop, right? For example, on a 5-year basis, actually YINN is still down 34%, right? So when I look at returns of ETF, I'm looking more towards consistency. And if you were to ask me, I would definitely choose, for example, KWEB, that is pretty consistent in terms of return, right? 20% when the market is going up. The broad Chinese market is up about also 20%. So it's quite a close reflection, right? Or I will actually choose something that is more broad-based like GXC, right? That 1 year has returned about 15% and is very well diversified, over 1,000 holdings over here. Is the US ETF the best? Actually, what you can do is actually to hunt in the Hong Kong stock market. So to hunt in the Hong Kong stock market, I just want to share with you guys a very useful tool, and it is this, right? So this is aastocks.com, right? They didn't sponsor this video, but I always use this website to find any information I want regarding the US stock market. And over here, they actually have an ETF tab where you can actually search and compare different ETF that's listed in the Hong Kong stock market. So what I did over here is I find this similar ETF that is listed both in the US and Hong Kong Stock Exchange and did a comparison. So number one is the MSCI China index. So over here we have MCHI, and the almost equivalent is 2801, right? In the Hong Kong stock market, they are not in ticker symbols, but they are in numbers. So you just need to remember the numbers quite well. Over here, let's compare the expense ratio. MCHI is 0.59%, whereas 2801 is 0.2. So therefore, you can see, even though they hold almost similar holdings, the return is actually slightly higher in the Hong Kong Stock Exchange 2801, right? The number of holdings are very similar. Now, let me just show you what are the holdings over here. This is actually a more tech-focused ETF that focus on Hong Kong stocks rather than the Chinese stocks, right? So you can see your Tencent, Alibaba, a lot of tech stuff, right? So over here, I would say, hey, expense ratio does play a big role because they are almost identical over here, but the performance is actually better than 2%. Okay, now let's move on to the next one, which is one of the broader class of index in China, which is the CSI 300. So I'm putting here pitting against ASHR versus 2846, right? So you can see over here the expense ratio is even bigger difference, right? ASHR is 0.65, whereas 2846 is 0.16. And therefore, it results in a difference of return of almost 4%. 4% difference, okay? Now, I wanted to show you how identical these two holdings are. So over here, these are the two exact holdings in each of the ETF. You can see the top few holdings are very similar. They are Guizhou Maotai, CATL, Ping An Insurance, right? China Merchant Bank, Media, Yangtze Power. So they are very similar. The only difference is maybe a slight difference in weightage. Okay, so for those of you who have more access to the Hong Kong stock market, so for example, let's say if you're using Interactive Brokers or you're using a brokerage that have access to Hong Kong Stock Exchange, actually, it is probably more advisable, right? Beneficial as well to get good returns by investing directly in the Hong Kong stock ETF. However, if you don't have access to the Hong Kong stock market, guess what? It is still not too bad, right, to buy into the US ETF that I just listed here. Yes, you may get a few percentage lower, but it is a lot easier to get started. And on the aastocks.com website, you can actually download all these data and information about different ETF, and you can actually compare them between expense ratio, returns, and even across the holdings as well. So this is a very useful website, right? If you're interested in the Hong Kong stock markets, do go into it. So if I'm going to invest in the China stock market, the first thing I will do is to look at the ETF first rather than buying the individual company, because I'm not very familiar with the company profile and how they run the expenses over there, right? So I want to be safe. I will buy the broad market index. I would generally do is I will look at the ETF and look at what are the specific holdings. And if I want to decide to invest in individual companies, actually I will start from those names, right? So that will give me a gateway into the China stock market. While the China is still running right now, I'm very cautious about it because it has run up so fast, so quickly. And one thing we are certain about the stock market is that whatever goes up eventually will come down a little bit, right? So if you are investing in Chinese stock market, perhaps wait a little bit longer, see if there's any opportunity there. one thing's for sure is never chase the FOMO, right? So guys, I hope you all learned a lot from this video. Let me know if you have any other ETF that you think are worth pursuing. Alright, personally, when I'm looking at China ETF, what I'll do is I'll look at something that is a bit more diversified like MCHI and ASHR. But if I want a more tech focus, actually my go-to will be actually KWEB over here. Alright, so guys, let me know if you have any questions. I hope you enjoyed the video. Do like and subscribe, and I'll see you guys next time. Bye bye.